This scalping strategy has an 80% win rate. I've been journaling my trades for months and it shows its profitability. Now, unlike all the other BS YouTubers, I'm not going to give you a one-size-fits-all strategy because mine's a little different. I'll basically be giving you pieces of a puzzle that you have to learn how to put together each and every day. Let's hop onto my computer so I can show you exactly what I mean. Alright, so let's get started into the video. This is gonna be a yap sesh, okay? So if you're not able to concentrate without me fucking messing up with your mind with all these edits and hooks and visual effects or whatever, then trading is not for you. There's gonna be a lot of times where you need to be patient and learn. Also, sorry, I have a little bit of a cough. So basically, what we have to understand is that we are gonna be trading ICT concepts, and these 6 concepts are the most important concepts in my opinion, because you are able to understand how the market works. So I forgot to write breaker. But yeah, it helps you understand how the market works. So these are trades I took today. Here's some of my trades recently. Okay, I always delete my drawings, but here's my trades recently, and I'm going to show you exactly why I took each and every single trade. So first things first, before we continue, I'm going to explain further what these concepts are. I actually have videos on my channel where you guys could look in more in depth, but for now this will do. I'll have to go through here. So first of all, let's talk about buy side liquidity and sell side liquidity. So as price is going up, for example, it's generating a lot of sell side liquidity on these lows because retail traders, investors, whatever, whenever they trade, whenever they take their strategy or whatever, it's common practice to put your stops at a low. So what happens sometimes is there's a lot of manipulation that occurs within the market. People, again, wait, before I continue, this is ICT's stuff. I'm not taking claim for any of this. So it's common knowledge that people usually put their stops at lows. So what happens is markets, we usually think that it's free, everybody has equal chance or whatnot, but the problem is that that's not how it is. It's supposed to be like that, but that's not how it is. So algorithms and institutions, what they do is they usually target people's stop losses and other institution stop losses because it generates more orders. So for somebody to buy, somebody else has to sell. So if I want to buy shares, but there's no orders for me to buy, what would happen is people would sell it off, target somebody's stop loss. Now automatically, boom, orders are being taken out. There's millions of people or thousands of people that set up orders and put their stop loss in that same exact position, not to mention institutions that did that as well. So what happens is price goes down, takes out their stop losses. Now automatically, now there's thousands of orders that are able to be filled, so they buy it at a discount, right? They buy it cheaper and they could sell it at a higher price. So that's what happens. There's a lot of manipulation in the markets. So this is sell side liquidity. Buy side liquidity is the same exact thing but opposite. So if it's going down, these are sell side liquidities right here. This and that. It's just prominent highs. So not every high is a sell side liquidity or will be touched into, and not every low is not every low is a sell side liquidity, and not every high is a buy side liquidity. Take that into consideration. So order blocks usually occur when there is a break of structure, right? So a break of structure is the change in the direction. It's like market structure shift. So if we were going if we're going high, what we would like to see for us to change our bias to shorts is a break of structure. So if we go to the bottom wick, so price moves, as you can see, it moves like this. So for it to break structure, it has to go below the bottom wick. It has to close below this bottom of the wick. So if we look over here, there's this wick, it closed below the wick. That's a break of structure. Okay, this is a break of structure. Now because this is a break of structure, price will probably start going down, right? But you, again, don't only take one of these puzzles and run off with it. You have to take into consideration everything I'm about to tell you, everything I'm about to reveal, because they all tie in together. So learn buy side liquidity, sell side liquidity, and break of structure. And if you add FVG onto that, boom, now you have the 2022 mentorship model. I'll actually link ICT's mentorship in the description too. So you could learn more from the person that made this. So boom, there's a break of structure right here. Because there's a break of structure, the last candle before the move down is now an order block. So this is now an order block here. Let me change the color to be order block. This is now an order block. So in this, let's look at another case. Let's say for more visual help, let's say price was going up and then boom, it broke structure. There's order block could be both ways too, like if it's going down and it switches, or if it's going up and it switches. So boom, it switches. There's a market structure shift. The last candle before the market structure shift is an order block. So see how it's starting to go down now, and there's like, I have these black candles. It's literally just the last candle that's not black, like the one before that. So that's an order block. So what happens a lot of the time is price will wick into this order block. See, in this case it did that a few times, and then just continue going on the way that it's going. If it ends up not wicking it and going past it, running past it, that in itself is something too. That is a breaker block. So in this case, this would be what's called positive breaker block, because it would come back, touch into it, and then boost off. Right? Do you see that? So let's look at this order block that I've drawn out. This is an order block. Price went into it, touched it, moved down, touched it, moved down. There's just a lot of orders that are filled within this block. So how am I doing on time? 6 minutes. Whoever is still here, congrats to you. You guys are gonna actually make it in trading. So order block, we talked about breaker structure, breaker blocks, sell side liquidity, buy side liquidity. Let's talk about fair value gap and inverse fair value gap. So what you would notice is every single candle must be filled. So this is how usually it should look like. See how this wick and this wick merged into one, and how it just filled. There's no gaps in the market. As you can see, sometimes that doesn't happen. See, there would be an order block here. FVG here, which then would become inverse fair value gap because it's filled. So usually what happens within a fair value gap is, let's say it's let's look at this one, because I actually took a trade off it. So boom, we see that this fair value gap, it created a gap. So the three candles, 1, 2, and 3, the wicks did not merge to create it created a hole. It didn't merge. So it created a hole, and price, we went into that hole, the gap that it created, the gap of fair value, and no, the gap it created, and we're trying to bring fair value to it. So we're gonna touch into it and then move up. That's how it usually should be when it comes to fair value gaps. However, sometimes here, see how we were supposed to touch into it and then go down. So this is how it was supposed to look like. Touch into it, go down. It didn't happen, and this in itself is its own piece of puzzle. It's an inverse fair value gap. This shows that the trend is starting to change. So this is a probably higher time frame fair value gap, maybe a 15-minute fair value gap. Yeah, so it's a 15-minute fair value gap, or actually something else too. But if we zoom in and in, wait, what the frick? I was looking at the wrong one. 15 minutes. Yeah, it's a 15-minute fair value gap. It touched into it, respected it, touched back into it, respected it. So the fact that this fair value gap inverse and this fair value gap inverse in itself is a confluence. So that's showing us that the direction of the market will start to change. Pair that with the break of structure that I showed you, and I'll show you guys something else later. Pair that with the break of structure is showing us that price is just going to keep going up. I would have traded this. I would have traded at 7, but the thing is, I have rules which I'll share with you guys near the end of the video, set in place to minimize loss. I do not trade at 7 because there's no point of that. There's not a lot of volume. Today was a very irregular day. This doesn't usually happen. As you can see, I usually hit my trades around 8:40ish to 11. So 8:40, I try to find a trade because usually, or sometimes, if there's a really good move before 9:35, before market open, if there's a really good move, market open will continue that move to another buy side liquidity. So here, let me show you what I mean. So in this case, we touched into this 15-minute fair value gap, inversed a bunch of these fair value gap, broke structure, just kept going up. It created a fair value gap. We retraced into the fair value gap. I thought we were about to inverse it for some reason, for a certain point, but then what I saw is that there's this big bullish move. So I'm like, okay, we're gonna respect this fair value gap. Not to mention we're close to all-time highs. Maybe price is trying to go up to all-time highs. I placed a long entry. I put my take profit at a buy side liquidity on the 1 hour. So see this 1 hour buy side liquidity. So you guys are watching this in hindsight. You guys are telling me, Sandro, you're so stupid. Why did you get early? You could have traded all the way up to here, maybe even higher, had this 13 RR win. But you guys are looking at it from the future. Again, don't do that. Stay focused on the present. In this case, I didn't know that we were gonna go up higher. I did not know that. I wanted to play it safe. Of course, I could have placed like just took partials and then just let it run. But the thing is, again, I had no intention of just risking my money. Plus, I had to go to school, so I couldn't really monitor the trade to move stops to break even and whatnot. So I just let it touch the buy side liquidity. I exited. Now, this isn't the only reason why I entered off. I didn't only enter off that. So if we hop onto the 3 minutes, the 3 minutes, there was a change in state of delivery, which I'm about to teach right now. The reason why I didn't tell you this later is because you guys didn't know what it was yet. So a change in state of delivery is the same thing as a break of structure, except instead of on the wick of the candle, it's on the body of the last move of candles. So before we touched into this fair value gap, we had these two bearish candles which were moved upwards. Not to mention we also touched into a 3-minute fair value gap right here, and then we then we inverse this fair value gap. So boom, again, like I said, this is showing good bullish movement. We inverse this fair value gap, we moved up, changed state in delivery, which means that now price is most likely going to continue higher. Placed an entry, put my stops on this. It kind of moved up a bit when I was showing. Put my stops on the low of this candle and put my take profit on that buy side liquidity. Now, there's also something else I want to show you guys, standard deviation. There's a lot to unpack in this video. I have more videos on my channel where I go in more depth about each and every single concept. If you guys want me to make a following video where I just strictly go off of just like you guys comment what you guys don't understand and I'll make a video about it. But yeah, if we look at standard deviation, just copy these numbers on your Fibonacci. So this is your Fibonacci retracement. Copy these numbers down. So if we look at my Fibonacci retracement, the buy side liquidity was also right next to -4 standard deviation. So again, this was a smart take profit. So let's look at this trade. I didn't trade off of break of structure. I traded off of the 3-minute change in state of delivery. Boom. So what did I do in this case? Again, you have to every single day find a way to put the puzzles that I just gave you together. You have to put them all together. And also, wait, I forgot to talk about SMTs. SMTs is just what's called the divergences between correlating pairs. So if let's look at NASDAQ and ES. So NQ moves up, let's say in this case, but then ES, what they did was they did this, boom, and then maybe up like that. So in this case, this would be an SMT because one went down, the other one went up. I didn't really look for SMTs because I was kind of in a rush, and again, I was on my phone. I didn't have double charts. It's hard to look for it. But regularly you should do look for SMTs. So here's exactly how I traded this morning. I'll remove all my drawings. So what I noticed is, so I trade, not only did I take that trade, but I saw a reversal, potential reversal. So I saw this buy side liquidity that was swept. So we swept buy side liquidity. Now, what most day traders get wrong, and they think that, oh, the market is against them, is they trade and they try to predict it. You can't predict anything. You're not smart enough. You don't have any of the measuring. You're just a retail trader watching a YouTube video from a, I'm not gonna even disclose my age, but you're watching a YouTube video from let's say somebody that shouldn't be on this. So you're not gonna be able to predict the markets. I'm not able to predict the markets, and if I ever say that I'm able to predict the markets, I'm a fraud. Instead, what you have to do is you have to observe the markets. So we see this 4-hour buy side liquidity swept, which is also a 1-hour buy side liquidity. So boom, we see that. Now we can look into a little bit deeper. So we could see that we are breaking structure, and we could claim that either this is an order block, or even this small candle right there is an order block. This is something I didn't annotate because I didn't have the need to, but yeah, it's just something cool because of what I just showed you guys. So what else do we see? This fair value gap got inversed. Give me a second. All right, I'm back. So let's look at this. So fair value gap got inversed on the 5 minutes. Fair value got inversed on the 5 minutes. This means that price is starting to show that it's gonna have a downtrend. Not to mention, we had a change in state delivery on the 5 minutes. So this is all adding up from what I taught you guys. So there is a change in state delivery on the 5 minutes. There was a fair value gap that was inversed, a liquidity sweep, an order block we touched into. Everything is showing correlation to it being a sell-off. So change in state delivery, and then boom. Now what we gotta do is we want to look at like we could have traded. I could have obviously traded this, and targeted my take profit, which I'll show you how to get again. But this is kind of a wacky trade. It's in the middle of a move, and I usually wait for the change in state delivery to close before I enter. So in this case, I would have had such a shit entrance. But what I noticed is we went so down, and then we touched into this fair value gap, and then we started to go up a bit. We gained a little bit of orders. We started to go up, and we touched into this inverse fair value gap. So once we touched into this inverse fair value gap, and I saw this wick down, I knew that I wanted to enter here. I placed stops like around either here or here. I don't remember, but here would be a little riskier, so I'm assuming I placed it there. And my take profit, I took this here to my change in state delivery, from the top to the change in state delivery. I targeted -2, I think, or I forgot actually, but I believe it was -2.5 in here, because I don't want to tell you guys that I targeted -4 and it looks like I'm such like an amazing trader, because I kind of forgot. But you guys could go back into the video and see what I targeted. So here, -2 standard deviation, and yeah, do you see how like it all lines up? Now here's what you have to understand. Number one, don't predict the market. Number two, just follow all these puzzles I just gave you, learn how to put it together. So these are the pieces of the puzzle. You have to learn to put it together every single day. Now this isn't going to be one of those videos, or this isn't one of those videos where I just tell you, oh, you have to look for a turtle soup reversal, you have to look for the supply zone, the demand, this the touch into this at 10:30, whatever. It's not like that, because that's not how real trading is. You have to understand how price moves. Another thing I was gonna mention, but this video is already 20 minutes long, is that price always is attracted to draws of liquidity. I'm not going to talk about this at all today. I'll make a video about this following if you guys want to. If you watched fully, comment down I watched fully, and then I don't even know. Also, I have a free Discord community. I called out some of these trades on the Discord community. If it's not me telling you guys the trades, there's usually other people talking about the trades too. It's just a bunch of day traders. They're all trying to grow together, get good together. They help each other out, they answer questions. And my success is partially due to the fact that I made this community and I got these really dedicated members that help me whenever I'm in need, and I help them whenever they're in need. And it's just a really good place to be in if you're a new trader. If you watch this fully, I'm gonna only be telling you, okay? I could have said this at the beginning, blew up my Discord numbers, sold you guys something, and then I'm set, right? But that's not how I want it to be. I want it to be a community full of dedicated traders. So it's gonna be in my description. There's gonna be a link, a Discord link. Just click it. Yeah, you guys are dedicated traders, and I want more people like you on the Discord server, because I know people like you will be the ones that will be helping me get better and helping the server, the people on the server get better. And yeah, if you watch fully, again, I appreciate it. Learn how to spot these moves. Yeah, so real quick, because I didn't really talk about SMTs, I want to talk about SMTs for a bit. I didn't talk about it properly, but if we look at here, this low made a lower low on the what's it called, S&P, but it made a higher high on the Nasdaq. So that is SMT. Just learn how to put this all together. It took me a while, but yeah. Whatever. Why am I dragging that? See ya.